So I'd spend a few minutes talking about myself, just what brought me here to the world of early stage investing, a little bit about my partners at Eden, and what we do as venture capitalists. So I started life as an investment banker, and I did 18 years of doing transactions, mostly mergers and acquisitions of technology companies. So I started my first internet deal in 1992. I raised some money for an entrepreneur who went on to be very successful with a public company called Jupiter Media. And I really got a taste for the convergence of the media and the technology industries. And I came back to the UK. I started work for a small company called Broadview, which was a tech-focused investment bank. Joined as employee number 4 here in London, employee number 40 globally. And over the next 6 or 7 years, we had a cracking ride. It was the late 1990s. I worked on about 70 M&A transactions, got to know 70 entrepreneurs, incredibly closely. We did some incredible deals. We took the company up from about 45 people up to 400 people. The cost base from £10 million a year up to about £80 million a year. And in 2001, the market just completely fell away. And we ended up taking the cost base down from 80 down to 15, 20 million pounds. And we survived, and we ended up selling the business to Jefferies. And I worked for Jefferies for a couple of years as an employee and decided I couldn't do that anymore, and therefore looked for my next big opportunity. And I had really, and the two things I really enjoyed doing was firstly working with entrepreneurs and working with high growth companies. And so I said, well, that's what I've got to do next. And what people said to me is, well, Ben, my clients always said to me, you investment bankers, you have all the glory. You show up for the last 6 months of the story, and you get all the glory, whereas you weren't here in the early days. And that's when we really did all the hard work. So what I've spent the last 7 years doing is getting there in the very early days. And I decided to join a group of people who had built technology companies, who'd been software engineers, turned entrepreneurs, turned investors. And so my partners, Mark, Charlie, and Peter, have all built software companies. They've taken them public or they've sold them. And we raised a fund from very large institutional investors, like the people who own this building, for example. And we set out about investing in early stage companies. And what we do today is we invest a few £100,000 initially at the seed round, maybe up to the A round, but we look at finding the companies that have got the opportunity to be big successes. We've done about 35, 36 investments through the fund. We've done about 60 investments in total because we do seed investing as angels as well. But the focus is finding the next big thing. And what I found interesting about being a VC for the last 7 years, what have I learned? Well, a couple of things. First of all, interestingly enough, venture capital is an interesting business. 65% of the money we invest is wasted. It's not my number, it's the industry number. We have LPs who've been doing this for 40, 50 years. They've invested in all the best investors, and it's the same number. 65% of the money invested creates no return. Probably 20, 30% creates some return, and effectively it's the top 10% of the money that creates all the return. So we're in the hits-driven business. This is the X factor of technology companies. You're looking for the 1 in 10 that's going to make a difference. And so that's when investors tell you we're looking for big market opportunities, we're looking for disruptive technologies, we're looking for some traction, i.e. we'd like to see some revenue, please. What they really mean is we're looking for things that we can make a lot of money on. We're looking for things that can make us a 10 times return, 10 times our money on one deal. And that's how VC works. And it works quite differently from angel investing, because if you're an angel or a seed investor, you can get a great exit from a business that you sell for $20 or $30 million. If you're a venture capitalist, you lose money on those transactions. This is why we talk about looking for billion-dollar exits, because that's where we make our money. And that money on that transaction pays for all the mistakes we make. So it's been an exciting ride. 7 years in, takes a long time, always takes longer, always takes more money than you think. So as entrepreneurs, you should always think about that. It's a long-term gig, and it's going to take longer than you think, and you're going to need more money. So plan accordingly. Thank you very much.